Welcome to Chit Chat Money. This is our Thursday deep dive episode where we interview an analyst to discuss a single stock or industry. And today we have on the show Kris from Potential Multibaggers. That is his service on Seeking Alpha, where they seek to find, as it sounds, potential multibaggers. And one of those multibaggers for him has been the trade desk, which we talk about today. They are sort of the disruptor or the innovator within the digital ad landscape. And they have a very charismatic CEO in Jeff Green. And it's been an outperformer over the last 5 years, really since it's become public. So this is a fun interview to get into. And if you want to learn more about the business, stick around because here's our interview with Kris.
Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schafer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are also general partners at Arch Capital, and Arch Capital may have positions in the securities discussed in this podcast. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guests is not formal advice or recommendation. Now please enjoy this episode.
All right. Today we are welcomed by Kris. He has been on the show a number of times, but it has been a while. You may know him as From Value on Twitter. He is we were talking about this before the show, the CEO, founder, lead author, whatever you want to call it, of Potential Multibaggers. It's a service on Seeking Alpha that we will link to in the show notes. But today, we're going to be talking about the Trade Desk, which I think is a company a lot of people in the investing community are maybe familiar with, but maybe not so much if you're, new to investing. So can you give some history around the business? Kind of how did they come to be one of the leading digital advertising companies? And I guess what's the genesis story here for the Trade Desk?
Yeah, well, first, Ryan, Brad, I'm very happy that I'm back with you guys. It's always fun to talk to you. So let's go to the Trade Desk. The Trade Desk is two people, actually. So Jeff Green and Dave Pickles. Well, of course, there are thousands of employees right now, but it starts with Jeff Green. So Jeff Green, after he finished university, he joined Microsoft in he worked at MSN, if you still remember that messenger service. And he worked at Microsoft after university in Salt Lake City for 2 years. And then he founded a company called ECN. And that was actually one of the first, or maybe even the very first programmatic advertising company. So, but that there have been several updates, of course, since then, a lot of updates. And then 4 years later, he sold that company, Microsoft bought his company at ECN. So he was back at Microsoft at, in the marketing department or advertising. And there he met Dave Pickles. And he stayed there for 2 years, and he was frustrated with how Microsoft treated his former company because they did almost everything wrong according to Jeff Green. And so he started together with Dave Pickles, who's still the CIO today. He founded the Trade Desk. And so actually the idea that Jeff Green had was that he also knew trading and investing. And the idea that he had was, why not make buying ads much easier, just like you have a broker, which is, in between the buyers and the sellers. And you don't even have to know the buyer. You don't even have to know the seller if you're the platform. And that's actually what the Trade Desk has become. The Trade Desk is the platform where you can buy and sell ads. Well, actually, the Trade Desk is on the demand side. So that means that it's teaming with people who buy ads, not who sell. But of course, their supply as well from the from content makers, but that's not directly. We can talk about the details later, but so it's actually a platform, and the trade desk takes a percentage of the worth of the campaign. Let's call it that, and that percentage is actually quite high if you compare that to brokers. So it's 20 to 25%, which is quite a bit. Well, not always, of course, there are always deals, et cetera, but it's quite high. And the reason that it's so high is because the trade desk adds a lot of value actually for its, ad agencies and other customers. So if you're Unilever, you can go to the trade desk and say, we want a campaign. And you can actually, just like buying a stock, you can say, I want to spend this much and I want those channels. And what the trade desk will do is, like a good broker, is try to find most bang for your buck. So, and that's why the trade desk is completely on the DSP, so demand side platform. So they only team with the the advertisers. So, and that's already very important to know. We'll probably get into that a bit later.
Yeah, and you kind of answered the next question we have here, but I want to go through a little bit more. You talked about how the overview of the digital advertising process works, but for someone, I think this part for any first-time investor in this space, it gets a bit confusing. So I kind of want to hit on maybe some of the details again. Let's say you mentioned I'm Unilever. You make an ad. You go to say, or then at the end result, it gets put in front of a person. This could be a display ad. It could be a video ad. It could be an audio ad. Actually, if you're listening to this show, the trade desk could be supplying some ads for you right in the middle of it.
Yep.
But
audio is growing quite fast. It's a smaller market for them, but it's actually growing quite fast.
Yeah, we will talk about maybe these growth avenues, CTV especially later. But how does that process work? Do they just have a dashboard within their team, and are they able to just seamlessly do this? And is that what it means by programmatic? You're kind of just, okay, I don't have to talk with anyone at the trade desk. They'll do it all for me. They'll put it on Roku, Spotify, all the different places. Any details there that investors need to know about?
Yeah, well, actually, it's a very complicated process, which is amazing actually, because it goes very fast. We're talking milliseconds here, and so you have an ad slot, right? So Ryan, for example, is watching, I don't know, Disney Plus. Do they already have ads, right? Yeah. So there's an ad slot there. Now, Disney has an SSP because it has its own SSP. So that's supply side platform. So the supply side platform, if it's a smaller website, for example, they will use an SSP, for example, like PubMatic. So PubMatic will put that ad slot, and people can actually make a bid, right? So they can say, oh, I'm willing to give 5 cents for this. Oh, I'm willing to bid 6 cents for my ad, and that's actually where that is done, is on the trade desk's platform. So that it's actually a bidding platform, but the trade desk will always try to make the price as low as possible for its customers, because they team with the advertiser who wants as much bang for their buck as possible, of course. So that's actually how it goes, and this goes in milliseconds. So and of course this is done programmatically, because it's not that a person is really bidding there in that millisecond. 5 cents, 6, 7 cents. No, that goes programmatically, because an advertiser has said beforehand, I want to give this profile. I want to spend that much on that profile. So maybe if your mother watches Disney Plus, normally she will get another ad, unless she's looking under your profile. So that's actually how it goes. So and that in that sense, it's programmatic. That it's not as if a person intervenes in that process, because we're talking about it goes faster and faster, but we talk about, let's say, 200 milliseconds or so, or even depending on where you are, et cetera, et cetera. But it's very fast. So that's a bit more or less how that works.
That makes sense. Now, I guess over the last, I think, couple of years, they seem to have outpaced the industry overall. So what's kind of allowing them to do that? Why are they, I guess, growing so quickly relative to the rest of the advertising industry?
Yeah. That's a very big question, because it has multiple answers. But I think it started, first and for all, the Trade Desk is the one that clearly sides with agencies and big brands, et cetera, et cetera. So that's already that makes them different. If you look at the walled gardens, as they call it, so Meta or Facebook and Google. I'm talking about Google because Google is the ad department of ad Alphabet here. So if they are both DSP and SSP, so they make content, well, not themselves, but we do, and then they also are DSP. So actually, that's about a bit schizophrenic, because at one side, as a content creator, they want to maximize their profits. On the other hand, as a DSP, so they have to say, oh, we have this and this ad, and you can have it for as little as possible. So they have to find some sort of compromise there. So and that goes for a lot of players in the industry. So they have both the supply side and the demand side, and those don't really mix well. The Trade Desk has always started with, we're clearly on the DSP side, so demand side, so the advertisers. Now, and one of the crucial things they did, and I think that was 2016, 2017. Now, when the Trade Desk had its IPO, that was in 2016, I think. Jeff Green gave a talk. He's a very gifted speaker, by the way. If you haven't listened to him, you really should. If he has a series, for example, how is it called? In normal terms or in speaking terms, or I don't remember exactly, but he just explains those often very difficult concepts of ad tech and programmatic advertising in clips on YouTube or in 4 or 5 minutes. Very clear, very good to see if you want to know something about the industry. Now, let's go back. What they did back then is they said, if we are not going to IPO, who else will? What he meant was that programmatic advertising had an awful name. It was seen as the dirtiest industry, there was. But the Trade Desk wanted to up, the standards. And how did they do that? And I think that was still 2016, could have been 2017. They worked together with a cybersecurity company to eradicate all fake ads. Now, that was huge for the industry. What I mean is this. Now, if you're a supply side platform, you could, it's in your it's in your advantage to say that you had 1,000 impressions while you maybe only had 500, right? So that's how, and they could do that technologically with fake ads. And at that time, it probably was about 50% or 40% or high numbers, and depended a bit on the medium you were using, but a huge percentage was fake. So that was very important. The trade desk could throw out all the fake ads. What does that mean for advertisers? Of course, they have to pay less for the same views, or they had less views, but then they had to pay less as well. So that was already very important, and that gave a lot of companies a lot of confidence in the trade desk. These guys really stand up for advertisers. So I think that is very important. Another important thing is, as I said, Dave Pickles is still the CIO, and he's the guy on the background. And Jeff Green is the technological guy as well, but he's the visionary guy. I always have to think of Steve Jobs, someone who's technically very, very good, but also sees where things evolve. So Steve Jobs has once referred to being smart as you see all the people with stupid little maps. And being smart means that you're on the top of the building. You can just see the road, right? And that's actually what Jeff Green does. I mean, I have followed him for so long. So I added the trade desk to the Potential Multibaggers in 2019 at $19.50, split adjusted, and even before that, I think it was 2017 or 2018. And he always does something not many CEOs want to do, and that is predicting. And he has made so many predictions, and they were all correct. Very specific ones that you could control, right? They said, oh no, Google is going to have to wait to abolish cookies. It's not possible in the first years. And, Google had said, we'll do it next year. Oh, yeah. And then Google came out, oh, we'll have to wait for 2 more years, for example. But back to Dave Pickles. He is very important as well, because the trade desk is technically superior to everyone else. So they have much more things they can measure. So they give insights on, the returns of the ads, much more than anyone else. They have already used AI, for example. It's now a buzzword, but they have used that for I think at least 5 years, and probably earlier. I mean AI all over the platform, not just we have a very special corner here for AI. No. So technologically, they are also superior. And then, as I said, it would be a long answer. And then a third thing I would want to point out is data. So it's always fancy to say, oh, we have the best data, but the trade desk has the best data by far. And why is that? Well, there are multiple answers to this. UID2 is a part of that. But they also have partnerships with big retailers, for example. So with Walmart, with Home Depot, and many, many, many others, and they have their data as well. So those, which data are better? If you are liking a Facebook clip of a dog who stands on his front feet or paws. Wow, great data, right? No, if Walmart can show, this is how it goes. So the trade desk targets a certain area, for example, for a specific brand. Let's Heinz ketchup, right? So they target Boston. And then they can measure in Walmart later how much has that campaign yielded. So how much more ketchup has been sold because of the campaign? I mean, this is what advertisers have been wanting forever. They want to measure how their campaigns work. Up to now, up to a few years ago, it was always, oh, but brand awareness is important, et cetera, and you cannot measure that. And the Trade Desk can. They can clearly measure, and they can give their customers the numbers, and those are often high. One of the last earnings calls, Jeff Green mentioned a customer who had a return on investment of 5.4, if I remember correctly. It was more than 5. So every ad dollar had more than 5 in return. So if you can show that to your customers, I mean, you're going to stick with that one, right?
Yeah, that makes sense. And you brought up a couple good points, which is, so first of all, on that marketing side, there used to be that expression of, I think it was a CEO or someone said 50% of our marketing spend is worth it. We just don't know which 50%. I think the Trade Desk is hopefully trying to eliminate that problem. The other thing I wanted to say is you mentioned the initial purchase price of, I think, what was it, $18 or something like that. We're looking at it today after a long kind of drawdown from COVID and kind of a difficult period for tech stocks in general, and it's at $75. So it's a little bit of the testament to the buy right and sit tight approach. But I wanted to talk also kind of about maybe the mechanics of how the Trade Desk works attracting customers. So I guess I'm curious, do you think of this as sort of a sales organization? Like, are they going out and trying to get advertisers onto the platform, or is it kind of advertisers come to them and they're like, oh, well, we know that, you have a better measurement, or we can track our ROI better. How do you think about it?
It's a bit of both. But, the Trade Desk is not, if you want to advertise Chit Chat Money, you're not going to the Trade Desk because they only, have customers. You have to spend a certain amount per year to be able to be a customer. And that's quite big. I mean, it also depends on which country you're in. But in the US, I think it's 30 million a year or so in ad spending. I don't think Chit Chat Money has 30 million a year to spend on that.
You'd be correct.
Yeah. Hey, well,
it was a wild guess.
In the near future.
All right. That's the spirit. But for example, in Canada, I think it's just 1 million, or that could have been Mexico as well. I'm not sure, but they have different prices. So, but it doesn't mean that if you want your ads through the Trade Desk, that's still possible. You can go to an ads agency, and if they together have more than 30 billion, 30 billion, that would have been too much, even for Chit Chat Money in a few years. So then you can still use the Trade Desk as well. So that's actually how it goes. Of course, every advertiser of above that level will be approached by the Trade Desk as well. So it's a bit both, but they also say that they see a lot of brands and ad agencies just come to them because they know that they have better data, better insights.
Right. That makes sense. All right. Moving along here. What is UID 2.0?
Yes, it's very important. It's actually, Jeff Green always calls it the currency, the ad currency. So it starts from, maybe I would just have to explain first what UID stands for. Is it uniform? I think it's uniform identification. Or is it universal? I think it's uniform, but whatever. It's something like that, it's actually a standard that the Trade Desk themselves have developed. Google still wants to abolish third party cookies, and they are in the process. And now third party cookies, a lot of people saw that as a very big negative for the trade desk if third party cookies would be abolished. Well, that's not really the case, because the trade desk was years ahead with UID and then UID 2.0, and they developed the standard and then moved it open source to some organization. So it's not theirs anymore. They have given it away to everyone. And what it actually means is that it's a bit like a cookie, but it's completely privacy. It respects all the rules when it comes to privacy. It gives much more insights. It can be used on all platforms. And so it's actually, Jeff Green always says that it's the currency of the internet. Why? Because, we're used to free things, right? If we go to a site and, most of the sites, unless they have some sort of specialized, insight or, like Potential Multibaggers, for example. So, but the rest is free, right? This podcast is free to listen to. So what that means is that, nothing is free. There has to be an exchange, and the exchange is that is the data. So, for example, Netflix has already said that the value of their ad supported viewers is already higher right now than a paying member or a paying subscriber. So, and that's why Jeff Green calls this the currency of the internet. Now, what this means is, for example, on the last earnings call, he gave a great example, I think, and I will more or less summarize it here. There is the biggest Indonesian retailer, the local Walmart, let's call it, and they say, we want to reach more people. And what the trade desk does then is, that company has a loyalty program. So they have 2 million people in that loyalty program. Now, what they do is they insert those data points onto the trade desk's platform. Now, what the software will do is compare what things are in common between the loyal customers, right? So, I don't know, maybe they are a certain age or what have you. So they will compare all those things and see, oh, okay, those most loyal customers have these criteria. Okay, we can now link those data with what we have from everyone else. So everyone in Indonesia, in this case, with the same characteristics, because people have, opted in for UID 2. And what it means is that, you go to a site, you have to log in. You're either tracked or you give your email address, and that's for everything then. So those things are combined. So the data, which people in Indonesia have the same criteria as, the loyal customers that we see. And then those are targeted. Now, the cost of acquisition from that, local Walmart, I don't remember the name, the Indonesian Walmart, went down by 66%. Because those ads were so much more targeted than what they did before. So what do you think? Will that retailer go to the trade desk for the next campaign? Of course they will. And that's the value that the trade desk brings. And that's the value of UID 2.0 as well. And there was a mistake initially. A lot of people thought that the trade desk had to go to every publisher to to implement UID2, but that was not true because they went to AWS, they went to Google, and they said, can we introduce it here? Okay, no problem. So it became a standard quite fast, actually, and that's how they have the direct data from many people, because the data of those of that Indonesian retailer is now on the Trade Desk's platform, just like the data of Walmart, for example, of Home Depot, of all those others. And it's actually quite simple right now. On the last earnings call, Jeff Green said, big content makers cannot, say we don't want to work with the Trade Desk because there will simply not be enough demand for ads. And that was a bold statement, but I think it's actually true. If you and he could have referred there to to Netflix, for example, because Netflix worked or made a partnership with Microsoft, and what you saw is then, and there were articles that they didn't get the ad slots filled. I mean, maybe you have seen those articles as well. So it was okay. It was quite a success, but they didn't get all the ad slots filled. So I think that could have been. Everybody thought that Netflix would work with the Trade Desk. They went to Microsoft, and you see. I have heard that Netflix is already starting to work with the Trade Desk now. I'm not sure if that's true. That could be speculation, but I mean that's a reality. That's the power of the Trade Desk, and that's the power of UID2, which has become in a very fast time the new standard actually for data tracking. It's completely anonymized. It's completely privacy friendly. That's UID2 and its important role, and it's adopted now across the industry.
I think we've already touched on it a little bit, but is there anything else that the Trade Desk offers to advertisers that the walled gardens can't?
Yes, a lot. No, of course, the quality of the data, as I already mentioned. But also multi-channel. So many companies, want a total campaign on all channels, right? And Jeff Green said that let's first go to multi-channel in general. So if you advertise on Google, you can advertise on Google or on YouTube. If you advertise with Meta, you can advertise on Facebook, Instagram, and more and more bits WhatsApp maybe, and that will be it. If you go through the Trade Desk, you can also have ads on Google, Meta, but you can also have them on CTV. You can also have them on a website. You can have them on a podcast. You can have them even. So the Trade Desk is now in full transition, making everything that was not digital. That's also very interesting. So you can also bid for example, my target customer is rich and works in finance. Okay, in Manhattan, near Wall Street, there are digital ad displays, right? So they can change because they're screens more than the traditional fixed ad displays, and you can target those people between 8 and 9 in the morning when they go to work, for example. So even those things are made digital. You can say, I want my Heinz ketchup, I want it on display in Walmart, with 10% off, or buy 2 1 extra, and I want it on display, and I want the premium display place. Well, you can bid for that on the Trade Desk. So the Trade Desk is also transforming those traditional, offline ways of making ads, also making them programmatic. So, yeah, I think that's a very interesting evolution right now.
Yeah, no, totally makes sense. I want to talk about a specific vertical, and that is CTV. It seems to be the one they're the most excited about, but correct me if I'm wrong. What opportunity do they have left in CTV? And I want to hear your thoughts on the competition with YouTube for TV ads, because that is, at least in the United States, the most popular streaming service. If you combine both YouTube TV and YouTube, it's probably about 10% of viewership. But again, just curious in general, that opportunity and the competition with YouTube.
Well, the competition with YouTube is actually that there is no competition. Why is that? Because, the Trade Desk also will advertise on YouTube without a problem. So yeah, sure, there will be a part of YouTube ad, or there will be brands which go directly to YouTube or to Google and say, we want to advertise on YouTube. Oh, no problem. But most, especially bigger brands, will want a multi-channel campaign, and they will also want YouTube, but through the Trade Desk, because they can coordinate everything. And you don't want multiple platforms and do everything yourself. And that's actually the value that the Trade Desk. There are still companies doing that, for sure. Also because people are involved, and they want to make sure that their job doesn't become superfluous, right? That's always how one of the reasons why innovation is slowed down, because people want to understandably keep their job. But so yeah, there's still a lot ground to cover there, in that sense that companies still have to adapt to that a little bit, because it's relatively new. Now, as for CTV, there's a direct and indirect component. So the direct component is simple, right? So if you look at ads on traditional TV broadcast, you see that there are still too many ads compared to where the eyes are, where people watch their content, because more than half now is watched streaming. And that's that imbalance will go away. So much more ads will go to CTV. And Jeff Green has always said that if there would be a recession, that this process would even speed up. And, again, he's right. He has said that years ago. Because why is that? Because because when there is a recession, companies, reduce their ad budgets, but they still want the same effects, right? So and that's why programmatic advertisements are much more efficient than the traditional broadcast. So now the second and indirect consequence is also very important. What Jeff Green says is that companies, have always seen TV as some sort of brand awareness campaigns, right? With CTV, that has changed a little bit, but many still see them as brand awareness campaigns, and then they go further because that's the top of the phone, but they want that sale, right? So that they start with CTV, and then they go to other, they will target you on a website. They will target you in Walmart, where you make the purchase of that Heinz ketchup again. So that's why CTV is such a huge opportunity, because it drives everything else as well. So it's the first domino that drops and the rest follows. So that's why the rest of the Trade Desk also outperforms all the other big players in the industry, because CTV drives the other divisions of or the other possibilities for advertisers as well.
And just to clarify for all the listeners, we're not sponsored by Heinz ketchup or anything like that. So
neither am I.
We did get some questions on Twitter. And I think we touched on some of them kind of in our own questions, but one was from Luke Hallard, who has been a guest on the show before. He asked about the end game for OpenPath. And then this one I really liked as well, kind of the potential to disintermediate the supply side platforms or the SSPs and kind of become that two-sided marketplace. What do you think about that? And then the thoughts on the end game for OpenPath.
Yeah. So OpenPath, to be clear, is actually big publisher. So we're talking about huge publishers who can directly put their content for sale on the trade desk. That's more or less OpenPath. And yes, it has been a theme for since it started more than a year ago. So, the trade desk is trying to disrupt SSP as well. Well, on every conference call, Jeff Green, in very strong words, says that's no way the plan. So, and I believe him there. I think that the reason is again because if the trade desk would do that, they would become they would have the same problem as Google, as Meta, as other walled gardens like Roku was until recently, because they have opened up for other platforms as well, both on the SSP and DSP side. But I don't see them doing that at all. So they will not. They don't control the supply there. They just offer it, and that's a big difference. It's not that they want to maximize the returns of the big publishers that use OpenPath. They will remain firmly on the side of DSP. So I'm really, it has been talked about for over a year, and to me, it's a non-discussion. I can never see that happen. Of course, it's my more or less informed opinion. You cannot, see into the future. I think if the trade desk would want to do it, they certainly could, but I think they don't want to do it, and I think that's the right thing to not do that, to not want to be both DSP and SSP, because then you get into trouble because you have to act against your own interests on the other side. So,
yep, makes sense. Conflict of interest.
Yeah.
Now, let's hit the stock with one question. What are your thoughts on the valuation? I know the market cap, it's always been a premium valued stock, but it's one that has put up some impressive growth. So I'm curious how, as someone who is, interested in growth stocks, interested in having a decade-long view with, potential multi-baggers, how you look at the trade desk currently.
As you say, it's expensive, and it has always been expensive. It was also expensive when I bought it at 19 and a half, 4 years ago. So I always have to think of an article that Morgan Housel wrote years ago. It was, what could I have paid as a PE to have market-like returns in this stock? So you go back, and he went back. I think the article was written in 2013, and he went back to, I think, 1995. Don't ask me why, but that was it. Bank of America traded at 6 times earnings, 6.1 times earnings in 1995. But it actually had to trade at 3 times earnings to have market-like returns. And Coca-Cola traded at, I think it was 88 times earnings. No, it didn't trade that. It traded at 24 or something, but it could have traded at 88 times earnings, and you would still have had market-like returns. I'm not sure if it was Coca-Cola, but I think it was. It could have been another company as well.
Sounds right.
So, and that's actually how I think about valuations over the long term. If you look at the Boston Consulting Group had a very interesting stat once that showed, if you look at shorter term, and that's 1 year, 3 year, the most important element is the multiple for stock returns. If you look at longer periods and you look at 10 years, then what the company does is most important. And what I mean with what the company does and the numbers of Boston Consulting Group showed that revenue growth and cash flows were most important over a longer period. So if you look at the trade desk, they have been profitable in every quarter but one, the pandemic quarter in 2020, since 2013. So I think that's important as well. This is not a money-losing company. This is a profitable company. And yes, if you look at adjusted numbers versus GAAP, you will see a difference. Why is that? Jeff Green has had huge compensation, which still has influence there. But there's no dilution because the trade desk also buys back shares. There has been quite a bit of anger actually from some people that thought this is outrageous. You cannot do this so much. Well, I have to say, because I think it's in total it's 2 billion, but there are very strict limits, and it is over time. And I think that the stock has to trade above a certain level for at least 30 days, et cetera, et cetera, et cetera, and then he can get the next bonus. And there's a full program there, and if he can bring, or he can reach all the goals in total, it's not 2 billion maybe, but 1.8 or something. It's huge. It's huge. So now, if he does that, from here, I think if I remember well, the highest price was $375. I'm quite okay from here. If my stock goes from 75 to 375, he can have a bit. So especially because the dilution, actually the trade desk buys back more than the dilution. So or recently, I have to say, that was not the case last year. I'm not even if you look at everything, the dilution, and they would not buy back. Even then, the dilution would be like 4 or 5% or something like that. So it's never great to see that, but I'm still okay because it's he's aligned with shareholders, and that doesn't make it great, but it makes it better. it makes that bitter pill a bit sweeter.
Yeah, no, makes sense. Let's get our wrap-up question, our favorite one that we ask on every episode, and that is the pre-mortem. What are you looking at for why an investment in the trade desk could perform poorly, or why you would end up selling your shares or something like that in the future?
Mm-hmm. I think in this space, innovation is extremely important, and you see that the trade desk, as I have said, technologically they're superior to everyone else. In of course, platforms like Google and the walled gardens have great technological capabilities as well, of course. But I mean, from the open internet, that's what Jeff Green always calls it, the open internet. Because you can go everywhere. You can go to Facebook, but you can go to YouTube, but you can also go to Walmart, the displays, et cetera, et cetera. You can go to any site. You can advertise with Chit Chat Money. through the trade desk. So I think it's important that the trade desk keeps innovating, and they have just released an AI update. I have not been able to. It was only released Tuesday, so 2 days ago when we are taping this. I have not been able to look at it, but just short summary, but it looked impressive again. They totally changed their platform. It was 2 years ago. In just 6 months, I think 75% had already switched to the new platform, because they wanted to, customers to switch over 2 years. And usually, customers are conservative. They switched in 6 months. 3 out of 4 had already switched. So those constant innovations are very, very important. I also see Jeff Green as very important for the company. He's the visionary. He sees where the company has to evolve. As I said, he has made so many predictions that all proved to be correct. Not a single, and I'm talking about dozens, that you can control, not just, very vague, but very, controllable. If he would leave, I probably would trim my position a bit as well, because it's a big position. So yeah, I think that, and there are always, if you look at risks, you probably know the quadrants. You have the known knowns, you have the unknown knowns, you have the unknown knowns and the unknown unknowns. And I think the last quarter, the unknown unknowns, is the most important one. Very often, it's something completely else than you expect. So you can take a look at the risks, sure, but very often is something completely different happens, and that's just investing, and that's just life, right?
There's always uncertainty in investing.
There's always uncertainty, and John Lennon put it like this: life is what happens while you're busy making other plans. So I think that's correct, and I think that goes for life, that goes for investing, and I think there are risks that we are not aware of, and thinking that you know everything is just arrogant.
Well, that is going to do it. That's all the questions we have. Kris, for anyone who wants to follow along with you, we have a lot of probably new listeners who maybe haven't heard you before. What are the best places or best resources to keep up with you?
Well, if you want my quick takes, then you can follow me on Twitter @FromValue. You can also read my public articles on Seeking Alpha. There are 5 a month free if you're a Seeking Alpha subscriber, which I would highly recommend. It's the value you get is huge. You can read all my free articles or public articles, and then I have my service, Potential Multibaggers. There's a 2-week free trial there as well. And a 2-week free trial, sometimes people are afraid that they're locked in one way or the other. I've counted it. It's just 3 clicks and you're out. So it's not that I don't want to lock in people. It's, you have to be happy. And if you're not, you can read everything. If you say, I like it, you stay. If you don't, well, you leave. No problem there. So try it out.
Awesome. Well, that is going to do it. We want to remind our listeners that Brett and I are not financial advisors, so anything we say or discuss here on Chit Chat Money is not formal advice or recommendation. We are, however, general partners at Arch Capital, so clients may have positions in the securities discussed in this podcast. Thank you all for listening. Thank you, Kris, again for joining us, and we will see you all next time.